It's all red on this Friday morning. Dow's off 500 and the Nasdaq is down 255. Mark Mahaney joins me this morning. Now, you're big on Amazon. So what do you think of Amazon contributing big bucks to the OpenAI funding round, $110 billion?
Well, you know, the biggest debate in the market right now is AI. How much CapEx is going to be spent? And Amazon's at the top of that list, $200 billion. They're going to go negative in terms of free cash flow. They're investing in OpenAI aggressively. There's this huge question about what this is going to mean for workers and for productivity, et cetera. I'm looking right through. I'm trying not to. I'm looking right into that hurricane, and I like Amazon as a stock. I'm going to stick with my guns on this. I think you're going to get material revenue growth acceleration from all three segments of the business: their cloud business, AWS, their retail business, and their advertising business. This company is leaning into a lot of product innovations, and I think these are rational capitalists. I've covered this company for over 25 years. I don't think they would be spending $200 billion on CapEx if they didn't think they were going to get a pretty good return on it. I'm sticking with my guns on this. And I also think there's a very large market opportunity, and I've tracked the product innovation. I'm going to stick with Amazon. 285 is my price target.
Overall, big picture, do you think AI is still a net positive for the economy and the market?
Yeah, I strongly believe that. So we've gone through, and you and I have lived through a lot of these major technology cycles. 25 years ago, that was the internet. These are very disruptive technologies, no question about it. But companies that embraced those technologies, embraced the internet, embraced cloud, embraced mobile, those companies ended up being very good long-term winners. I think Amazon is one of those. I think AI is a huge productivity boost, and we're going to see this. We're going to see this in, I don't think we're going to see job losses all in. We're going to see disruption, and companies that don't invest aggressively are going to lose market share and probably will shed employees. But companies that innovate, embrace new technologies, they're going to get bigger, they're going to get better. Overall, we're going to have more job growth because of technology innovation, not less.
You cover Duolingo. That stock's really taking it on the chin after their latest earnings report. Is this an AI problem for Duolingo?
It could be. I think the bigger thing is the open question is whether they've just saturated their end market. They have 50 million daily average users, which is a good, healthy amount. But this stock carried a high multiple for a while. The question is are there really 100 million daily active users for the company? That's what they're chasing. When you have growth rates decelerate this sharply, you have to ask yourself, it's either competition, there's an execution problem, or it's just a limited market size. I think the third one is the most likely problem.
You got it. Mark Mahaney on a Friday morning. Thanks so much, Mark. You have a great weekend. See you soon.